Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello trading and investing friends, checking in on the market rundown. We'll look at SPY, IWM, QQQ, financial sector, biotech, healthcare, and the volatility index. We'll look at oil and commodities in a video later this evening. But for now, we had another scenario on Friday where, again, I'm a broken record at this point, but we see weakness from extended hours where headlines come out about the trade war, and then we see bulls buy the dip from the open. Now, we definitely saw a lot of profit taking as bulls not wanting to hold over the weekend due to that headline risk because of the lower opens that we consistently see over the past couple of weeks. But the scenario is when the bell rings, I've been looking bullish, and that has been the way to go most of the time. Yet again, we close higher than we open. The only times we have closed lower than we have opened have been 2 times in the past 2+ weeks. That's very notable for me because, as we know, volume is our prove-it indicator, and the volume is after the bell rings. So yes, the price can drop on headlines and extended hours, but I want to know what's going on when the real volume is at play, and that is showing me that the bulls still have control at this point. So we have our low of the pullback down at 280, and we have our high of the bounce. That range is set at this point. That is the range to be watching for the next week going forward. Because if we break 280, then we are likely going to lose the weekly uptrend, and we will then look at a more prolonged period of consolidation. If we break the top of this move at 289, we're looking back at all-time highs. So that's our line in the sand, and where we stand is we're looking for the bulls to form a higher low compared to 280, and then try and see this continuation, because right now we're still in a downtrend of lower highs and lower lows. We broke the lower high pattern just barely. You could consider that a double top. We have to see a higher low and higher high to confirm a daily trend change, and then this weekly chart would be looking to progress back towards that all-time high, as it is still in a weekly uptrend. The other scenario is we keep pulling back and we fade back down and break 280, and at that point 277.64 becomes the most important level, and that is the weekly uptrend level. And if that were to break, we would then zoom out and look for monthly consolidation to be underway. So that's where we stand for the market as a whole overall. IWM is weaker, and considerably so. If you look at the same thing, we get our range established, low of the bounce, or low of the dump, high of the bounce, and we pulled back on Friday, closed near the low of the day, and we don't have much space to work with at all to form this daily high or low. And just looking at percentages, whenever I'm comparing individual names that have the same setup, I can look and say, all right, we can pull back about 1%, and we're at that support level. And then if we look at where SPY closed and how much space the bulls have here, it's up over 2%. So there's twice as much space to work with on SPY for the bulls to form that daily high or low than there is on IWM. You can see the shape of the daily chart for last week is very similar. It's just much more pullback, less bounce and more pullback for IWM. And we never broke that clear line in the sand for IWM, which was 156.83 as the lower high. QQQ. So comparing it to the other two, it is more in line with SPY as far as having more space for the bulls to work with. We just barely broke this resistance level here, 185.89. Again, you could consider that a double top. We will need a daily higher low and higher high to change the daily trend. But if we want to know how much space the bulls have to work with, we're looking at almost 3%. So even more space to work with. The tech sector and the market as a whole, S&P 500, have been very correlated, and watching the tech sector has been great in terms of dictating direction, and that was the way to go. First thing on Friday, I mean, this is the kind of setup where it's just so clear from once the bell rings. The bell rings, we see 20 minutes of just straight bullish action. So that tells us, okay, if we don't see XLF, the financial sector, and we don't see QQQ, the tech sector, hit the low of the day from this point, if only one sector hits a new low of the day, or if neither hit the low of the day, we know to be looking bullish. So as after the first 10 minutes of trading and the bulls show up, that's our line in the sand. From there, we had a very nice 5-minute equilibrium pattern where we had our high of the bull move, low of consolidation, lower high, higher low, pretty much a double bottom, and then the bull break occurred. And it occurred with a ton of conviction and follow through. So it's a kind of scenario where you don't have to be making trades in the first 15, 20 minutes of trading where things are going crazy and the volatility is off the charts and ranges are being established. There is plenty of trading opportunity late morning and at times in the afternoon after we set a range on the morning. We see tightening patterns and then we look for the breaks of the tightening patterns to give us some short-term day trade signals. And that was one of them on the 5-minute time frame, getting that bull break with a lot of follow through. XLF, again, a much different setup than the other names because it did drop to a lower low on Wednesday where the other names did not. So I'm looking at this range down 26.52 support, 27.21 resistance, and it's choppy within this range. Looking at it on the hourly time frame, we can see there's not a lot of clarity. So I would be patiently waiting for a break of these levels and looking to see if the bulls can shift this momentum further, knowing that XLF has tons of space to work with on the weekly time frame. Anything over 25.08 maintains the uptrend. So the weekly uptrend is not at risk at this point. But the sooner the bulls change this daily trend and set a weekly higher low, the better the odds for continuation will be. So the bulls this week want to see a break of 27.21 to try and keep shifting this momentum in their favor. Biotech sector still weak. So the biotech sector bounce was just a lower high forming. We had support of 80.17. The high of the bull move was 84.84. It's just a lower high compared to 87.87. And now it's up to the bulls to hold 80.17 and break 84.84 to change the daily trend. If we do not change the daily trend, we're just looking to maintain within this downtrend. Biotech sector is not as important as the healthcare sector. Again, just going over the sector weight on SPY. Tech sector, clearly the biggest holding. And then we have the financial sector and the healthcare sector pretty much both tied for number 2. The healthcare sector is actually slightly more important, but not by much at all. And that changes, so keeping an eye on it. But looking at XLV, we're watching the longer term range. We've been watching for this pattern for the last almost a month at this point, probably 3 weeks. Once this bounce started, we got our lower high. Now we have our higher low. Can the bulls make their way back up? It's pretty much just waiting for a break of 86.83 for a bear break or 90.85 for a bull break as to how this tightening pattern is going to play out. And actually, let's look at the monthly here on XLV. So the monthly equilibrium is forming with our high, low, lower high, higher low. This is the most important pattern for me for the summer as far as important sectors go. How this equilibrium breaks, in my opinion, is going to have a very significant impact on the S&P 500. And some bears are looking at this and saying that's a head and shoulders pattern. And if we do drop down and break this support of 80.61, it would be very notably bearish for the broader market as a whole. So that's something to be keeping an eye on just because it's a little bit more condensed and a little bit more clear. And if we look at the monthly time frame on these other major sectors like the tech sector, we don't really have a tight pattern. We have consolidation underway, but not much more than that. And for the financial sector, on the monthly time frame, if we were to pull back, we would look for a monthly higher low compared to the low of December. But again, not really in a tightening range just yet as much as XLV is, which tells me that XLV would likely break its monthly tightening range while the other sectors are forming tightening ranges. So I'm going to be watching XLV pretty close for the next couple of months in the summer here. And that's the volatility index. We did drop down and break this support level of 1560. And we are going to be looking for anything under 2130 just being a lower high. Looking at the longer term perspective, weekly inside bar, waiting for a break of that weekly inside bar. But I would expect some short-term upside next week, but I would expect that to be a lower high compared to 2130, of course, pending any kind of new headlines. But at this point, the market has had some ample time to adjust and price in the fact that we do not have a trade deal right now. We have a timeline of looking towards the end of June with the G20 summit coming up, and that being pretty much a deadline, not really a deadline, but a time frame that Trump has highlighted as far as looking for progress going forward. So until we get that, until we get there, I do believe that the market is pricing in this action to a certain degree at this point. We're definitely going to have little fluctuations with tweets and headlines, as always, but as far as any major concerns, major dumps and things like that, I don't think that's going to be in the picture for the next couple weeks at least. So we'll see where we get going forward. I'm still looking bullish as long as we're in weekly uptrends, and we're going to see if we can get these daily higher lows and higher highs. How we start off Monday will be fairly important just because we did close with a little bit of weakness on SPY with selling pressure on Friday. And the question is going to be, can we form a new daily high or low early this coming week and try and shift that momentum back into the upper 280s for the S&P 500? So I appreciate you watching. Hope you have a great weekend. Do good things, and we'll see you tomorrow.